Hello everyone. Today we're going to do a full step-by-step replay of the Friday's trade. So I only had one trade last week. I have a video that does a review, so it takes in context. But this video, we're just going to run through this step by step. And that's using the same model I use every time. So that's the FIG model. So first, let's prepare this chart. So I'm going to take away session boxes. I've got my 9:30 line right here. And what I'm going to do is go to I'm actually on the 1 minute. Okay, 1 minute. So I normally have my operational time frame on the 5 minutes, but for this replay, for clarity, I'm going to have this on the 1 minute. So let's go backward and let's go to the 9:30. Okay. All right, so take this away. Don't need that. So this is the market as at 9:30. So I have two reference points, the 9:30 and the 8:30. So what I do first is I take note of the low, any lows before 9:30, any obvious lows. I may use that low, I may not use that low. I'm just going to make that black. Okay. So that's the first thing I normally do. What is the low point before that 9:30? Now I'm doing this on the 5 minutes, not on the 1 minute, by the way. So just very obvious low point. Okay, let's go back to the 1 minute. The first thing I'm looking for now is direction. So let's play this speed 3. So the first 5 minutes is crucial, but I'm looking for direction. And that direction should happen within sort of 30 to 45 minutes. So what I'm looking for is between 9:30 and 10:15-ish, 10:30, I'm looking for direction to form. So if I'm standing, so Einstein said everything's relative. If I'm standing right here at 9:30 and I was to determine what is the lowest point and the highest point between 9:30 and 10:15, 10:30, I should be able to say between the lowest point and highest point, price has gone up or gone down or done nothing. That's the anchor. And that's why in my videos I talk about anchoring. It's relative. So someone else may stand in exactly the same position and may come to a different conclusion. They may do this because they're on a different time frame. And this is why I specifically talk about the 5 minutes being the operational time frame. And that way, when I anchor price, I can easily say, oh, that's the low, that's the high, and therefore that's the move. So we need direction. So let's play this. Swing down a little bit. So notice we swing down to this low. So that just makes this low even more important. It's 9:44 right now. Okay, let's carry on to 10:15-ish. Okay, so right here is 10 o'clock. So 9:30, 10 o'clock, that's within that hour, 30 minutes. We have a swing low here, higher low to the left, higher low to the right, swing low, and we've got a swing high right here. So this is the 1 minute, but we'll go to the 5 minutes. So this is the high. Let's go to 5 minutes. All right. If you were standing right here at 9:30, and I was to ask, what direction has price gone in? I think we can all clearly agree price has gone up. Okay, I think we can safely assume that. So if you were standing anchoring at 9:30 and you were to look to your left and look to your right, you can say by and large price has gone up. Yes, there was a little sideways, but overall we've gone up. Okay, so that's the first thing that the framework requires: direction. Nothing else. I don't need to know anything else. I just need to know what is the direction. That time may extend. It may extend. It may go to 10:30, but typically I'm looking at 30 to 45 minutes ish, right? Give or take. It can extend. It can go an hour. And I know it's ended because we formed a swing high and we're retracing. So we have this high, lower high to the left, lower high to the right on the 5 minutes. I can now move on to stage two of the model, the framework, which is fair value gaps. I talk about fair value gaps in a different video, but for now, this is the 5 minute fair value gap right here in yellow, and that's the midpoint. So we'll go back to the 1 minute, and that's this yellow box right here. So what I want to do now, as part of step two, is then fibs, add my fibs from the swing low to the swing high. And I'm looking for the fib and the fair value gap to overlap. Nothing complex, just does it overlap? We have fib and fair value gap overlapping. Now I just wait, because what I want price to do is fully retrace and then give me an opportunity to get a buy-in for a measured move. So let's see what happens. There we go. Price is retracing. All right, boom. Okay, let's go back there. It's gone right into that midpoint. You take your buy there. So first, we've got our move. We just measure it there. Now we can get a long position, and we are targeting 100%. So it's a measured move. Where do you want to put your stop loss? Okay, because this is midway through, I will put my stop loss just below this candle right here. No special reason, just below that. Normally what we do is put it below there. Okay, that's the traditional thing. Every day is different. But this trade was a one-to-one for me on Friday. And then we just wait. So we run it. There we go. Done. And you're done for the day. So that's direction, which we get first 30, 45 minutes ish. Retracement into a fair value gap that overlaps with a fib. And then you look for your entry. Any entry method is good. I normally look for the midpoint, depending on the size of the fair value gap. And then you take it for a measured move. You always want to keep it at 100%. It can extend to the 161, but if you're prop firm trading and you have a trailing stop loss, I would I keep mine at 100%. That's the trade, and that's the model. direction first. You need direction. You can't do anything until you have direction. You then wait for that retracement into a fair value gap that overlaps with a fib, and then you do your measured move. Does this have to be a fair value gap? Not necessarily. Not necessarily. You can use whatever method you want. I'll actually tell you, I used to use volume profile, and I would run this low to this high, for example, and use the point of control or the fair value area as is there as my uh, levels for a retracement. Does it retrace into the high of that fair value area, point of control, or a low volume node? That's another way you could do it, but that's not what this video is about. I have a separate video that talks about fixed volume profiles or the use of volume, but that's something else. For the operational model, that's the trade. So I'll see you guys in the next video.